Welcome to Talk Tickers. Today, we are breaking down the Q3 2025 earnings call for KNOP Offshore Partners, ticker KNOP.
Okay, let's dive into this. KNOP delivered a decisive beat, posting earnings per share that dwarfed analyst expectations by over 240%.
This outperformance was driven by top-line strength, with revenues hitting nearly $97 million. That's a 9 to 12% beat against consensus, and get this, up 27% year over year.
But, the crucial point is always the bottom line. Net income of $15.1 million. This is a sharp reversal from a $3.8 million loss in the same quarter last year. A really powerful turnaround.
So how did the market react to this blowout quarter? Let's take a look. Now, what's really interesting about this slide is the combination of high earnings and strengthening liquidity. I mean, look at that. It shows a company that is absolutely firing on all cylinders.
And yeah, the market definitely took notice. Volume surged to 2.5 times the normal turnover as the stock jumped over 6% on the day. Let's move on and see how this builds. Because a financial beat like this was underpinned by some near flawless operational execution. The fleet achieved an incredible 99.9% operational utilization. I mean, that is just remarkable efficiency. And this quote brilliantly illustrates the macro tailwind they've got. Management is confident that demand from FPSO startups is outpacing the supply of these specialized vessels. And they're capitalizing on this tight market too. They're locking in key contract extensions and new charters that really bolster future revenue visibility. But the biggest story isn't just the operational strength. It's the strategic tension created by an unsolicited offer from the company's own sponsor. So the sponsor, K, has made a non-binding offer to acquire all the publicly held units for $10 in cash. And this forces investors to ask a really critical question. Is the company more valuable taken private at that price, or by remaining a public entity? Well, the case for standalone value is pretty compelling, and it's anchored by a massive $963 million fixed contract backlog. So the crucial point here is that the market is already signaling its belief that the story is worth more, with units consistently trading above that $10 offer price. Now, while the Conflicts Committee evaluates the offer, management is executing a very clear strategy, shifting from a multi-year repair phase to an offensive one. And you gotta remember, this wasn't just some lucky quarter. It was the result of a deliberate plan to acquire accretive assets, recycle capital, de-risk the balance sheet, and signal confidence through buybacks. So what does this all mean for the next quarter and beyond? Well, here's our take. The company has reached a clear inflection point. What we're seeing here is a unique, event-driven value case being created. We expect continued operational strength, with the stock price driven primarily by the outcome of that buyout proposal. And frankly, we believe there's a meaningful probability of it being revised higher. Based on the powerful earnings recovery, strong operational momentum, and the valuation floor set by the buyout offer, we are initiating with an outperform rating. This is not financial advice.